2020 was brought in. Here's wishing all of our viewers a very happy New Year. Thanks very much for joining us on the first edition of India Business Hour for 2020. I'm Shireen Bhan. Let's start with the market action because Indian equities have started the new year on a positive but subdued note. So the Nifty and the Sensex closed with minor gains, though the Nifty ended the day below the 12,200 mark. Mid-caps also ending the day higher. However, banks underperformed with the Nifty Bank closing in the red, while ICICI Bank, Kotak Mahindra Bank and Reliance Industries were the drags in the market today. HDFC Twins supported the street. So a subdued but flattish start, and of course volumes on the lower side given the fact that most other markets are shut for trade. Let's head to the big story tonight. GST collections have come in above 1 lakh crore rupees for the second month in a row, but still below the government's monthly target of 1.1 lakh crore rupees. The GST mop-up in the month of December has come in at 1.03 lakh crore rupees. This is similar to the collection reported in November. However, it is a significant jump from last year's collection of about 95,000 crore rupees. Almost all states, union territories, barring Jharkhand and Lakshadweep, have seen their collections improve in December. Despite the political uncertainty that dogged the state in the last few months, Maharashtra continues to lead the way with monthly collections coming in at over 16,500 crore rupees. That's 22% higher than last year and more than 2 times higher than Karnataka, which collected over 6,800 crore rupees. Gujarat and Tamil Nadu also crossing the 6,000 crore rupee mark. UP coming in 5th with collections falling just shy of 5,500 crore rupees, completing the top 5. Sources say that strict compliance has led to the improvement in the month of December, and government expects the January number to be even better. Prateek Jain partnered PwC on the December collections and the trend going forward.
Maybe industry is a little cautious now to claim input credits, and therefore the collections are also higher. To what extent that has impacted the collection, of course, cannot be quantified. But one of the reasons for increased collection, it seems, in November and December is this 20% rule. But that said, what is encouraging is that the collections have gone up and without tax rate increase. And I just do hope that the government now looks at a slightly long-term view on the GST rates and they don't sort of increase the GST rates at this point in time, given the economic scenario that we have.
Well, that's Prateek Jain of PwC India. So crossing the 1 lakh crore rupee mark, which is an important number as far as GST revenue collections are concerned, still below the asking rate of 1.1 lakh crore rupees, though. Now, 2019 has been a year to forget for India's auto industry, and there was barely any improvement in sales even in the last month. Maruti, the only company in the green, posting a growth of nearly 4%. That's at the wholesale. Tata Motors posted a decline of 12%. M&M has seen a minor decline of 1%. Escorts and Eicher have seen their sales decline in double digits for the month of December. Parikshit standing by now with the details. Parikshit, the long expected lines, this is what the markets were prepared for.
The degrowth in the auto industry continued in the month of December, but there were some bright spots as well. Let's take a look at how different OEMs performed in December, starting with Maruti Suzuki. Maruti Suzuki sold 1,33,000 units in the month of December, but the mini segment, which has cars like the Alto, the Espresso, saw a decline of about 13.6%. The mid-size segment, which has the Ciaz, saw a decline of 62%. The van segment saw a decline of almost 52%. But the compact and utility segment were the real bright spots for Maruti Suzuki that drove up sales. The compact segment saw an increase of 28%. The utility segment saw an increase of about 18% year-on-year, and overall the month of December ended at about 4% for Maruti Suzuki. A lot of this is also because of the push towards retails and heavy discounting in the month of December. For Mahindra & Mahindra, the month ended 1% lower year-on-year. The passenger vehicle space was a bright spot for Mahindra & Mahindra, largely again due to utility vehicles that were up 10% year-on-year. Again, Mahindra & Mahindra offered heavy discounts in the month of December, anywhere between 35,000 to 4 lakh rupees on the Alturas. The car and van segment saw a 61% decline. This all includes electric cars as well. The commercial vehicle segment was a pain spot, 5% decline in the month of December. If you look at the medium and heavy commercial vehicle space, this continues to hurt the industry in a big way. 42% decline year-on-year in the month of December. Three-wheelers, again a bright spot for M&M at 14% increase. If you look at the tractor segment, that saw an increase of 3% in the month of December. Domestic sales up 4%, exports down 13%. Let's look at escorts now. The tractor sales for escorts were down almost 11%, domestic sales down about 10%, and exports down about 20%. So not a very good month for escorts. If you look at Volvo Eicher commercial vehicles, in fact, their figures really are very similar to the rest of the commercial vehicle players. Their sales down 19% year on year. The heavy-duty trucks, again, a pain spot for VECV, down about 47%, exports down 50%. But when we look at the commercial vehicle space, we must also remember that in the month of December, most OEMs have slashed production by almost 40% in order to make sure there is a smooth transition to BS6. There is no pressure on dealerships, and they are able to liquidate the BS4 stock already available with dealerships. If you look at other key players, including Honda, Nissan, Toyota Kirloskar Motors, all of them have slashed production. Honda saying that they are going to be stopping production of BS4 altogether and are now going to launch BS6 products in a staggered fashion. Nissan sold just about 2,169 cars. Toyota Kirloskar Motors said that it has witnessed a degrowth of about 38%, and all this is also happening consciously to some extent as OEMs prepare for BS6, maintain a lean inventory, cut down on production to make sure there is no heavy discounting towards the last week of March 2020. Back to you.
All right, Parikshit, many thanks. And yes, that does make sense. And it's good that OEMs are not piling up BS4 inventory onto dealers. But let's dig deeper into the internals of Tata Motors. The company has seen its total sales decline by 12% in December. In the April to December period, the company has seen its sales drop by 30% on a year-on-year basis. So as 2019 draws to a close, what does 2020 have in store for Motown? Here are experts and industry participants with their take.
These numbers were expected. You know, the BS4, BS6 transition is coming, and normally December is a month when the year change or a model change is a big issue after the month closes. So means 2019 model, if sold in 2020, is always on a heavy discount. So this time the companies and the dealers were very, very cautious, and because of the BS4, BS6 transition, our stocks are also in control. Overall, the inventory is in control because of the good sale of October and then consecutive in November also. The inventory level is in control all across except for the commercial vehicle segment, but there also it is improving day by day.
There are two things in margin. One is there is some positive headwinds, tailwinds for commodity price correction. But there is a heavy discount in terms of margin. So despite volume going up, the margin uptick, which ideally should have happened for any OEM, should not happen the way it is right now in terms of discounting.
Well, December sales there for the auto sector. Now, in a bid to improve India's ease of doing business rankings, the government is weighing some amendments to the Insolvency and Bankruptcy Code. Sources tell CNBC-TV18 the government may expand the composition of the Committee of Creditors who are in charge of the insolvency process, and that operational creditors could get a seat at the table. Now, remember, India improved 42 places in the World Bank's Ease of Doing Business ranking to number 63. This was largely thanks to the insolvency law, which saw India improve 56 places when it comes to resolving bankruptcy. Ritu joins us now with more details. Ritu, what are the changes that are being proposed, and what's the government's stance on tweaking the IBC law?
Multiple government departments are discussing a proposal to broad-base the composition of the Committee of Creditors under the IBC. Now, what happens as of now is that in the Committee of Creditors, only financial creditors find a place. Operational creditors do not find any representation in a Committee of Creditors. Now, the proposal here is to basically give limited representation to operational creditors in the Committee of Creditors. The idea is to reorganize the creditor classes for the purpose of voting under the Committee of Creditors. As I said, this is a discussion which is going on at the moment. This is in the proposal stage and is actually part of a broader initiative or a strategy of the government to have a better ease of doing business ranking. 6 different parameters have been identified by the government to have a better ease of doing business ranking this year. These are enforcing contracts, then you have resolving insolvency, and hence this proposal of allowing operational creditors in the committee of creditors. Then you have starting a business, registering property, paying taxes, trading across borders. So these are the 6 broad parameters which have been chosen. Last but not the least, we have also been told that the government will also focus on a new parameter which has been added to the ease of doing business, which is government contracting. So if a broader strategy being finalized to have a better ranking in the ease of doing business index, which will be released by World Bank during the later part of 2020. With that, it's back to you.
Okay, many thanks, Ritu. As Ritu was pointing out, this is not a decision yet. It is under consideration. So what could the addition of operational creditors to the COC mean for the bankruptcy process? Will it enhance ease of doing business or, in fact, go against it? Abhisar Divanji of EY with his take.
The whole issue and the way our law is based is on the fact that, and other court rulings have proven that financial creditors are a superior lot, a more responsible lot, and they have the ability to take care of all the stakeholders. And then we've seen all the litigation that happens with the retail deposit holders in the case of DHFL, for example, in the case of JP Infra for the real estate lenders. So these people then form bigger groups and they come in forms of representation. The problem with this, and this is also the problem with operating creditors, is that they come in very small numbers. So a large number of people with very small amounts, and they come and sit on a table with a significant stake.
Well, that's Abhisar Divanji. This issue of operational creditors seem like it has been put to rest. Is it likely to be reopened? That may be the question that we will hopefully get an answer to shortly, but this is something that is under consideration, is what we're given to understand. Now, trail travel has become costlier this year. The railway has increased fares for mail or express non-AC trains by 2 paise per kilometre and 4 paise per kilometre for AC trains. Anu joins us now with more. Anu, what is this going to mean in terms of the mop-up as far as the government is concerned, the railways are concerned? What's the rationale for this?
Well, Indian Railways have hiked passenger fares by 1 to 4 paise per kilometre with effect from January 1st. The hike comes after a period of 5 years. Remember, the last passenger fare hike was done in 2014 by 14.2%, and after that the fares have been hiked now. In case of non-AC classes, the fare hike has been in the range of 1 to 2 paise per kilometre, while in the case of AC classes, the fare hike is in the range of 4 paise per kilometre. Season tickets and suburban tickets have been excluded from this passenger fare hike cycle, and it is expected that this passenger fare hike will lead to an additional revenue of 2,300 crore rupees for Indian Railways. Now, this fare hike comes at a point when Indian Railways is witnessing a poor state of operating ratio. Remember, the latest report by Comptroller and Auditor General revealed that Indian Railways witnessed its worst operating ratio in 10 years at 98.44% during 2017-18. So it remains to be seen whether this passenger fare hike can substantially help Indian Railways' financial health, or it only becomes just a minor relief. That remains to be seen. For now, back to you.
All right. Anu, many thanks for joining us. So some hikes being announced there by the Indian Railways on certain tickets, but not just train tickets. Flight ticket prices may also go up. The cost of aviation turbine fuel has been increased by 2.6%. That's in sync with international prices. Consumers will have to shell out more for cooking gas as well. The price of non-subsidized LPG has been hiked by between 19 to 21 rupees across the country. Well, shares of Adani Ports rallying in trade today after CNBC-TV18 reported that the company is likely to acquire a majority stake in Krishnapatnam Port in Andhra Pradesh. The deal, if it goes through, will help Adani Ports bolster its presence in the East Coast. Nimesh joins us now with the details. Nimesh, who's Adani buying the stake from? The first, perhaps the first M&A for 2020?
This could indeed be the first large M&A transaction of 2020. And I understand that Adani Port is very, very close to acquiring Krishnapatnam Port. They are basically going to acquire 72% stake from the existing promoters at an enterprise value of close to 12,500 crores. Now, that would mean that they're valuing the deal at close to 10 times EV/EBITDA on the current year earnings of Krishnapatnam Port. With this acquisition, not only they increase the foothold into the East Coast, but Adani Port will become will be controlling close to 1/3 of the volumes of port business in India. Award on Krishnapatnam Port, it's the second largest private port in India after Mudra Port, and they manage close to 40 million tons of cargo across 10 terminals. Officially, Adani Port has declined to comment to our story, but what I understand is this deal is going to get closed very soon. Post the transaction, Adani Port will manage close to 350 million tons of cargo. Now, that's been their long target for FY20, that they wanted to achieve close to 400 million tons of cargo by FY20. So with this acquisition, they'll be probably very close to achieving that target. And as I said earlier, it's going to be EPS accretive deal simply because they're buying at 10 times EV/EBITDA on current earnings for Krishnapatnam Port.
All right, Nimesh, many thanks for joining us with that. The big international story, US President Trump has said that he plans to sign the Phase 1 trade deal with China at the White House on the 15th of January. He made this announcement on Twitter, where he said, and I quote, "I will be signing a very large and comprehensive Phase 1 trade deal with China on the 15th of January. The ceremony will take place at the White House. High-level representatives of China will be present. At a later date, I will be going to Beijing, where talks will begin on Phase 2, end of quote. CNBC's Kayla Touche is here now with more. Kayla.
President Trump himself announcing that January 15th is the date he will sign the Phase 1 trade deal. In a tweet this morning, the president says high-level representatives of China will be present, and that he'll go to Beijing at a later date for further talks. That date puts the signing 1 week after Congress returns from recess, facing a continued standoff between the House and Senate on impeachment proceedings. Yesterday, here on Closing Bell, I reported that the White House wanted to present a contrast to that sideshow, in the words of one source, and it appears that the president, with that date, is doing just that.
Office as the Army Chief General Bipin Rawat took oath as India's first Chief of Defence Staff. As CDS, General Rawat will function as the sole points of reference for the Defence Minister when it came to matters of warfare and nuclear issues. In his first address to the media after taking oath, General Rawat emphasised the importance of bringing synergy and integrating the three forces.
Chief of Defence Staff का जो टास्क कटआउट है, वो है तीनों सर्विस को एकजुट होकर सक्षम बनाना, और हम इसी तरफ कार्रवाई करते रहेंगे। मैं आपको ये यकीन दिलाना चाहूँगा कि इसमें आर्मी, नेवी, एयरफोर्स एक साथ टीम वर्क करते हुए कार्रवाई करेंगे। सीडीएस जो है उनके ऊपर नियंत्रण रखेगा, लेकिन कार्रवाई जो होगी वो टीम वर्क के जरिए होगी। ऐसे नहीं होगा कि अपने निर्देश के हिसाब से सीडीएस किसी फोर्स को चलाना चाहेगा। उसको जैसे बताया गया है, इंटीग्रेशन की जरूरत है।
The path ahead is not going to be easy. There are three big priorities for the first CDS of India. Firstly, synergy, bringing synergy and jointness between the three forces. That's the Indian Army, Navy and Air Force. The general saying that 1 + 1 + 1 does not need to be 3, it needs to be 5, it needs to be 7. The second big priority is going to be theatre commands, to reorganize the entire military and bring down the 17 commands to say 4 or 5, something that China has already done in 2016. And the third big priority is going to be prioritization of defense procurement. Every year, the defense budget has only gone down, but the list of things that the three services require has only gotten longer. So how do you prioritize and how do you allocate money? That is something that General Rawat, those are tough questions that General Rawat will need to answer. Those are tough decisions that the first CDS of this country will need to take as well. For the moment, it's his first day in office. He has a new uniform, he has a new role. All the very best to him.
Well, we will have to see how this plays out. That's my colleague Shreya Dhondial. The AIADMK has come out in support of the controversial Citizenship Amendment Act and the National Population Register. The party also voted in favour of the legislation in Parliament. Speaking to the media, the state's chief minister accusing the Congress and the DMK of misleading people. However, he has remained non-committal on whether the state will support the National Citizenship Register if the central government were to go through with it. Jude Sanith joins us now with the details. Jude.
Tamil Nadu Chief Minister Edappadi Palaniswamy has thrown his weight firmly behind both the CAA and the NPR, also accusing the opposition DMK and the Congress of protesting against both these legislations simply because they hope to gain political mileage from it. The Tamil Nadu Chief Minister pointed out how back in 2010 in the UPA government. Both the DMK and the Congress were in favor of implementing both the NPR and, of course, also the NRC. However, with regard to the AIADMK's stance on the NRC is concerned, the party is being non-committal, stating that Amit Shah, the Home Minister Amit Shah, did state that there would not quite be a uniform rollout of the NRC itself. Now, interestingly, these comments come just 18 months before Tamil Nadu heads into a crucial assembly election. So the fact remains that the AIADMK seems to be throwing its weight firmly behind its alliance partner, the BJP. Remember, 11 AIADMK MPs voted in favor of the CAA in the Rajya Sabha, which of course led to the passage of the bill, which would go on to become an act. So the fact remains that for the moment, the AIADMK is throwing its weight firmly behind its alliance partner, the BJP, even as the state heads into polls 18 months from now. Although how effective a strategy this will be, only time will tell. Although there is some pessimism associated with the strategy itself, given that both the AIADMK and the BJP have done way below par with regard to recent election results in Tamil Nadu.
Third moon mission, ISRO Chief K. Sivan today announced that the government has approved ISRO's Chandrayaan-3 project. In a press conference, he said all activities related to the lunar mission are going on smoothly and the aim is to launch by 2021. The configuration of the Chandrayaan-3 will be similar to that of the Chandrayaan-2, and the project is estimated to cost 250 crore rupees without including the cost of the launch vehicle. Like the previous mission, it will target the same place on the south pole of the moon. The ISRO chief also announced plans to launch at least 25 space missions this year.